Cars and stock markets, two of the hottest items in India right now, are coming together in the form of India's biggest ever IPO of Hyundai Motors. But did you know that at one time the South Korean company was in such dire straits that it tried raising money from India? Here's the story. This is Shakir Ebrahim bringing you Bisbo's business stories. Disclaimer, this is not a sponsored story by Hyundai. Please invest cautiously. 25 years back in 1999, Hyundai, strapped for cash due to the financial meltdown in its home country, looked to sell a 14.2% stake in its Indian subsidiary, Hyundai Motor India Limited, at a 2,000 crore valuation and even applied to the Foreign Investment Promotion Board. But according to a book by BVR Subbu, the former president of Hyundai's India's operations, South Korean banks which had given loans to the company did not approve of the equity dilution and the IPO never happened. How things change. For quite some time now, Indian markets are the best performing markets by a wide margin and offer some of the best valuations in emerging markets. Some Indian listed subsidiaries even trade at higher valuations than their foreign parent. Take Maruti Suzuki's market cap of $47.5 billion as against its Japanese parent Suzuki Motor Corporation's $23 billion. So an enthused Hyundai, makers of Creta, Venue, i10, i20, Santro, Verna and others, filed a draft red herring prospectus with SEBI to offload 17.5% equity via 25,000 crore, 3 billion IPO for a post-listing valuation of $20 billion. Imagine they were going to do 2,000 crores at the turn of the century. Now 20,000, showing just how far Hyundai has traveled in India. This IPO will be the biggest IPO till date in India, higher than LIC, Paytm or Vodafone's FPO. Hyundai will use the money collected to increase car capacity to over 1 million units annually once the factory acquired from General Motors becomes fully operational. It will use it to increase expenditure in R&D so as to roll out at least 6 EV models in the next 4 years and build a localized EV supply chain, and look to make India a hub for electronic vehicle exports to Europe, possibly through PLI, the government's production-linked incentive scheme for which it is eligible. Now, despite India being one of the hottest automobile markets in the world, with sales expected to be over 8 million units in 2035, double from today, it is still not an easy market to crack, and many like Fiat and General Motors have exited the country with heavy losses, and Ford is trying again, hoping to be third time lucky. The tussle for the third largest passenger car market behind the US and China comes just as Mahindra and Mahindra, Tata Motors are snapping at Hyundai's number 2 position. Maruti Suzuki, of course, is still number 1 with a 40% plus share. Hyundai's IPO will consist of 142 million 10 rupee face value equity shares, which are likely to be sold at a premium of approximately 1,400 rupees per share as per Bisbo's estimates, with the IPO scheduled for sometime later this year. However, this premium is subject to what is known as the Korean discount, where listed companies in South Korea curiously trade at a substantial discount to their global peers. For example, the price to book ratio of a South Korean company is a mere 34% of emerging markets, and even Hyundai's PE ratio is just 5.6 times in Korea, whereas Maruti Suzuki's is at 30. Now with 60,000 crore worth of sales in India and 4,700 crore profit, bankers will try getting Hyundai the similar 25 to 30 times valuation, which means that the premium can rise above the 1,400 rupees that we estimate. Therefore, part of the money from the IPO will also go into nullifying the Korean discount, which will be done by increasing shareholder value through buybacks and cancellations, thereby increasing its book value. Hyundai's IPO may set the tone for more welcome offerings by MNCs that has somewhat dried up in recent years, with reports coming in that LG and Italy's component maker Crore are also planning to list their subsidiaries. The South Korean automaker, having already invested 29,000 crore in the country so far, will add another 36,000 crore in India to buy the General Motors plant in Chennai. This at a time when they shut 3 factories in China over the last 3 years, showing that it is India now that is poised for a massive boom. So does Hyundai need India, or does India need Hyundai? That's the question.